Growing your Forex or your trading account from $200 to $2,000 in an instant. That's why you clicked on this video. That's what you want to know. Hey, for those of you who don't know me, I'm Rob. And for those of you who don't know me, I'm still Rob. I've been doing this for 30 years. That's a really long time. We're going to go over the charts today, and I'm going to show you the price action system and the way to trade. We're also going to go and I'm going to show you the strategy that's going to make that money for you, that's going to change your trading style. Hey, coffee with Rob. Let's have some coffee. Always good. Can't be without the coffee, man. Gotta have some coffee. But the mere fact that you think that you can take $200 and turn it into $2,000 in an instant, just like that, because that's why you clicked on this video, right? Just saying, perhaps that's why you clicked on this video. That is dreaming. So many guys out there are promoting that you can turn $200 into a fortune overnight. And you know, trading doesn't work like that. It takes time to learn to trade. And I keep trying to point out to traders that trading is a 50-50 game. Now, don't switch the video off because I told you can't just turn $200 into $2,000, because maybe you can. If you go after the charts and we go and look at my strategy and we go and see how the strategy works, then just maybe you'll be able to do it. But the thought of doing that is really effectively trying to gamble. If you gamble, if you go down to the 5-minute charts and you start trading, and you put $200 in a trading account, and you take 10% risk on every single trade, and you double it on every single trade, and you win every single trade, you'll do that. In fact, you'll turn it into a huge sum of money. But here's the thing, guys. Nobody wins 10 trades in a row. And the win rate doesn't make you money. Win rates don't make you money because every single trader out there, well, 80% of traders, actually have a less than 50% win rate. Did you know that? And that's a fact. Because the market's a 50-50 game. And do you know why the market's a 50-50 game? The market's a 50-50 game because the market's made up of buyers and sellers, and everybody thinks they're right. So if everybody thinks they're right, then 100% of traders think they're right, which means 50% of them are right and 50% of them are wrong in all probability. So if you take 10 trades, the probability is that you'll win 5 and lose 5, just like a coin toss. If you toss a coin, the high probability is that you'll win 5 and lose 5. And then you'll say to me, but how do I make a profit if I've just got a 50% win rate? Well, that's the strategy that I'm going to show you after the charts, guys, because the only way that you can make a profit in the market is by having a business plan and by following my strategy. The strategy is the thing that makes you the money. It's the only thing that's going to make you the money. You can't make money with a win rate. You can't make money with squiggly lines. You can't make money with charts. You can't make money with systems. You make money with strategy. That's how it's done. So let me take you to the charts and let me show you how you can make that money. Before we do that, don't forget, drop down to the description and get all the nice things that you want. There's a free Forex book there. There's a funded account there. There's loads of other goodies there that will help you get ahead in your trading. That will help support the channel. Go and do that. Go and grab those things. But before we go any further, let's go to the charts. Let's go and have a look at a system that may work for you, and then we'll talk strategy. I'm going to try and keep this video short and sweet, but that's not always easy. That's not always the case. It's not always the way it goes. Guys, don't forget the risk. Most traders lose money. If you're unsure, you probably shouldn't be trading. So guys, just keep that in mind. 70% of traders actually do lose money on position trading, and actually 99% lose on the day trading, the 5-minute charts, and trying to turn $200 into $2,000. So do be careful of that. Do keep that in mind when you are trading. Let's go and have a look quickly at the charts and go and see what kind of things we could possibly do to turn that money into a profit. What I do is I trade support and resistance. Now, what is support and resistance? Let me just close this off. That's just the trades that we've got in place at the moment on this account. And I just want to have a look here and just show you on any particular, I'm just going to keep this short and sweet today. What I do is this is a resistance level and this is a support level. How do I get those levels? Effectively, what I do is I take it to the day chart, and on the day chart, what I'll do is I'll take it to a line chart. And then what I'll do is I'll draw that level off the line chart. That level off the line chart gives me the resistance level, and I'll draw that line off the line chart. That gives me the support level. You see all the bottoms here where it comes down. So that has now changed. That support has moved down a bit. So we'll put it there. It's come down to there. It's come down to there. It's actually even come down to there, but I'm not going to take it down to there. I'm just going to say that's fine. That's a pretty good support level. And there's another support level even further down to the downside. And then the actual resistance level is now much higher because it's broken through the resistance level and turned that now into the support. So this now becomes the support level because it's broken through to the upside. So what you're looking for now is a much higher resistance level. Where's my next resistance level? Can you guys see where the next resistance level is? I'd take this. Why do I draw rectangles? Because a resistance level is not an exact point. It's an area where there's liquidity. It's an area where there's money. It's where the price likes to get to. Why do I draw it on the line chart? I draw it on the line chart because on the line chart, I get closing prices. You must remember on the candles, you get highs and lows and tails. And if you get a spike in the market because somebody stood up and said something absolutely silly, then you're just going to be drawing your line off a spike, which really doesn't help. There's a level. So these are the levels that the price keeps getting to. It looks very much like that is the level. So that's your resistance level. That's now your new main resistance level because every time the price gets there, it comes down and takes money, comes down, gets there, takes money, comes down, and then sometimes it breaks through. You get the odd breakthrough, nothing wrong with that, but this is a 1, 2, 3, 4, 5, 6, 7, 8 time resistance level, so it's a very strong resistance level. Then I will take it back to the candles. Why do I take it back to the candles? Because I like to see where my candles are going, where they are positive, where they are negative. I like them to be red and green. If I get a big long red candle coming out of an area, that means it's bearish. If I get a long green candle coming out of an area, that means it's bullish. Now I've got green candles breaking through a resistance and going to the upside. That tells me that the product is extremely bullish. So on this particular item, we're going to go back to the H4 because we trade on the 4-hour chart. And now you can clearly see that that's shooting to the upside, going up. And that's how you trade it. It's quite easy. Now, how do I know when it's turned back? I draw these trends in just to see, and if it breaks through the trends, then I know that we've got a trend break. What I'll do, for example, we're in the Euro Great British Pound with a long trade. So I've drawn that level in, that's my resistance. I've drawn that level in, that's my support. I'm in the trade because this was a trend resistance that I drew down. I draw those in lines because you can't really draw them in rectangles, but it just gives me an idea of where the line is breaking. It breaks to the upside with a nice long green candle, gives me the signal that it's long. I take the long and off she goes. And you'll notice that I only took the trade up here. I actually waited for this to confirm. Gave me confirmation that it's long, that it's definitely going to the upside, buy, and off she goes. It's broken through its structure and it's going the other way now. All the way down here, it stayed in structure, up, down, up, down, up, down. Now it's broken through the structure. Once it breaks through the structure, now you're waiting for it to go to the upside. For me to determine whether it's coming back or turning back the other way, I would put a trend line somewhere along here. And if it breaks back through that line, then I know it's going back downwards. And that's how you trade with price action. Very simple, very easy, not complicated. If you want to know more about candles, go online on Google, download pictures of candles, download patterns, and see what they tell you, see what the information is involved in there. I like candles just to look at. The tails tell me the sellers or buyers are getting back in. The big long candles tell me there's a lot of movement in the market because I don't see candles. I see traders. I see human beings behind the candles. And behind the candles, the human beings are all buying, the human beings are all selling, and they're telling me that the market is being pushed in that direction because that's where the big money is. You must remember when a candle moves like that, it's not retail traders like me that's moving it. It's big money that's moving the markets. And they know far more than I do about what's going on in the background. We can go and look at the news. We can go and trade on the news. We can go and listen to Donald speaking to Zelensky or whatever the case. That could make a difference to your trading. At the end of the day, what you want to be doing, you want to be looking at what the other traders are doing, and that gives you information. So what these squiggly lines are at any given day is a high probability trade. And that high probability trade is what's going to give you that so-called win rate that you like so much. Win rates don't make you a profit, guys. Win rates don't make you money in the market. All they do is because you have a high probability trade, you win some trades, and then you go and use my strategy that I talked to you about after these charts. That strategy is what's going to make you the money in the markets at the end of the day. That's what's going to make you the profit in the markets at the end of the day. Use this. This is a probability. This is a high probability trading system, which will help you to choose the right trades in the market to get you ahead. And then the strategy is obviously to pick trades that are going to make you more than what they're going to lose you. The risk to reward has got to be decent. So for example, when I took this trade, the risk to reward was take the trade there. The stop loss was below the support and the take profit was up here. This is a trailing stop that's moving up with the price. That's why it's above the support now. It's just a trailing stop. I like to put a trailing stop on so that it follows the price up and it gives me a better run at the end of the day. Guys, hopefully that helps you with your trading. I just want to have a look at my Brent trade here, make sure that the trailing stop hasn't moved up or too much or whatever the case. I would like for this to continue on to the upside and not coming down and take the stop loss out or something like that. Righto, so that looks fine. That looks great. US dollar, Canadian dollar, that looks good. You see once again here, risk to reward. My risk is up here, my reward's down here, and that's all I'm looking for. Once again, my stop loss is trailing and coming down with the price, following the price down. All right, guys, that's trading with the charts. Now go and listen to the strategy that's going to make you a profit in the markets, a strategy that's going to actually take that $200 that you've got and turn it into $2,000. Guys, if you actually do want to take a small amount of money like that and turn it into something, get yourself a funded trader account. Here's Funded Trader Markets. I've got a link in the description. Go and get it. You pay $100 for a $25,000 account. You go and trade it and you go and make some money and they'll give you the profit. That's the best way to do it, because then you're not risking $2,000. You're risking $200 and you're actually making a couple of $1,000 at the end of the day. So I hope that helps you. Strategy. So now you've seen the system. Interesting, wasn't it? Was it any good? Will it work for you? Will it be the thing that changes your style of trading? But the strategy is the more important part of your trading. And the strategy is this, guys. The strategy is really simple. You've got to have a business plan. And that business plan is this. You want to win more on your wins and lose less on your losses. And the way to do that is really quite simple. The big thing here is to keep the loss the same on every single trade. Now, how do you do that? How do you keep the loss the same on every single trade? Hey, it's Coffee with Rob. Let's have some coffee. Always good. How do you keep the risk the same on every single trade? Well, it's simple. If you have a $100,000 account, what you do is you say, I'm going to risk 1% of that account on every single trade. And then all you do is you say, that's $1,000 risk. Every single trade, I risk $1,000. But how do I manage that risk? When you take the trade, you simply go to the trade, you have a look at the trade and you say, that's where I want my stop loss. You choose where you want your stop loss. And it's usually an invalidation area. An area where if the price was to get there, you would determine that the trade is completely invalid and you don't want to take that trade even with someone else's money. That's your stop loss. Now you work out how much $1,000 is back to the cost. Now you've got the size of your trade. Now you just need to make a 2-to-1 win or a 1.5-to-1 win, and it's got to be within reason. Obviously, if you're going to make a win, it's got to be achievable target. You can't have a target that's just high in the sky. You also can't be risking $1,000 to make $50. You want to be making $1,500, $2,000 or $3,000 on every trade for the $1,000 risk. You got to have a good risk to reward ratio. Once you have that in place, you take the trade and off you go. Then it's as simple as go to my other videos, watch my strategy where I tell you how you follow the trade up, don't dollar cost average, don't move the stop loss down, and so on and so on and so on. I know you're going to do that because you see what you guys do. The trade goes into a loss and you think, ooh, I'm losing now. I don't want to be losing. So I'm going to divide that by 2 and then I'm going to get my money back. Or yeah, something like that. So you dollar cost average, that's what we call it. You double up on the trade when you're in a loss with a view to you're going to get that money back. Don't forget you've now got an invalidation area, a stop loss. And then it gets worse, the trade gets worse, so now you're doubling your loss is getting worse, isn't it? And then it's getting down there and it gets to the stop loss and you go, ooh, I know what I'll do. Move the stop loss out the way, won't I? And then you're just going to lose even more money. That's not how you do it, guys. That's not how you make money in the markets. You're just going to lose and it's going to blow accounts and you're going to blow your account over and over and over again. The guys who try to turn $200 into $2,000 on quick trading on 5-minute charts, what they normally end up doing is they normally end up blowing 6 or 7 accounts before they get anywhere, before they get to where they need to go. You tell me, guys. You tell me what you think. How does that work? There's guys out there that have said they can turn $1,000 into $1 million by doing this double up trade thing. But you have to win 100% of your trades. The chances of doing that are minimal. You'd be very lucky, and it's gambling. It really, truly is just gambling to do that. You can try it a few times over and over again, and maybe one day you'll get it right, and bully for you, that'll be fantastic. But 9 times out of 10, you're just not going to get it right. It's going to be really, really and you know, the nerves, the psychology behind, if you were to start with 1,000, now you've got 500,000. Now, let's say you reach that point. Now you need to risk 500,000 to get to the million. Are you going to be able to do that? Are you going to be able to risk that kind of money once you get there? Most people not. Most people, well, I don't know anyone's going to be able to do that. Really, that's going to be crazy on its own. That'll be insane. But I just thought I'd put that past you guys. I just thought I'd show you the strategy. I just thought I'd show you quickly that the possibilities of doing this. I mean, really, my title is really clickbait, but I did that so you guys will have a look and see for yourself that that's not the way to do it, guys. You're not going to make money that way. It's not that simple, okay? It's not that easy. It takes time to learn to trade. It could take you a couple of years to get to the point where you can actually trade. Guys, go down to the description, get your free Forex book, enjoy it. And if you want trade of the day every day, go and join as a member. That every day I give the members a trade of the day. Guys, thanks for watching, and until the next time, until the next video, don't forget to subscribe. Cheers, ciao, and bye.